Take a look at this stock price chart for Minda Industries. What do you see here? A business that has given consistent year-on-year returns to its investors. From 12 rupees in 2007, it is now trading at over 1000 rupees in 2022. This is a returns of 9000% at a CAGR, the yearly growth rate of 35%. Just imagine the kind of wealth that this business has generated for its investors. But let's take a step back here and understand why has all of that happened? What's the business model there? What are the growth levers for Minda Industries? What are the risks associated with it? And most importantly, how will Minda Industries' future look like with the EV adoption in India? All of that and much more, let's find out in this video. Alright, first things first, what does Minda Industries do? Minda Industries is one of the oldest automobile components manufacturing company, which means it manufactures all the components that are fitted into the automobiles and then supplies it to the manufacturers of two-wheelers, three-wheelers and four-wheelers. Which means the overall performance of this company is going to be directly dependent on how the automobile sector is performing in India. In terms of which components does it manufacture and how much does it contribute to its overall sales, take a look at this chart. Switches contributes to 33% of its overall business. Lighting contributes to 22%. Seating and casting 11% each. Acoustics 9% and another 11% comes from other small components. So as far as the components are concerned, it seems to be a well diversified portfolio for Minda Industries. Coming to the type of vehicles and how much sales does Minda Industries get from each of those, take a look at this chart now. Two-wheelers contribute to a whopping 81% of the overall sales of Minda Industries. Three-wheelers contribute to only 3%. Passenger vehicles around 13% and commercial vehicles another 3% of the total business. So this is a very concise, a very short understanding of the overall business, but it will give you a wholesome view of what Minda Industries does and from where does it gets its majority of the sales. Let us now take a look at the major growth levers for Minda Industries that have contributed to its success so well in the past. The first growth lever for Minda Industries, which in my opinion is their biggest strength, is the very strong portfolio across the electric vehicles space. This has happened due to multiple joint ventures with foreign companies that are experts in this area. As a result, Minda Industries has now started to manufacture off-board chargers, motor controllers, battery packs, etc. etc. So if there is one company that is going to benefit immensely from the EV adoption in India, apart from the historically well-known battery players, it has to be Minda Industries. I had also made a detailed video on 3 stocks that can be bought and that will drive the EV growth in India. For you to check that video, take a look at the video link in the description here. But now, coming to the second growth lever, the recovery in the two-wheeler and the four-wheeler segment. Now in the previous slide, I told you two-wheelers contribute to 81% of their overall sales. And this is a segment that took a massive hit during the COVID wave. Because of an ongoing recovery in this particular segment, Minda Industries is positioned well in the near-term future in terms of their overall product mix that they sell to the two-wheeler space in India. The third and the final growth lever as per me is a very enhanced and a diversified portfolio venturing into new products, which is why they are constantly gaining market share in India. In fact, they are even venturing into product sensors, which all the automobile companies use. Hence, Minda Industries is very well positioned for the future and these 3 factors are likely to contribute to their overall growth in the near term. But every business comes with its own set of risks. What are the risks that Minda Industries faces that the management should be extremely cautious about? Let's find out. The first major risk, according to me, is the delay in the automobile sector recovery. Now, Minda Industries has a business that is directly dependent on the performance of the automobile sector. Now, there is no problem in the demand side. Yes, the demand has picked up sufficiently post-COVID, but the supply has simply not been able to match up with the demand. We have seen an acute shortage and acute crunch on the semiconductors side, which is affecting the overall performance of the automobile sector. This is not a long-term risk. The demand will be matched with the supply in a few months, that is expected. But right now, Minda Industries does face this as a major risk as far as their short-term prospects are concerned. The second risk is an increase in the competitive intensity of this space. Now, the existing players are all ramping up their products. They want to match the needs of the EV market. Hence, they are coming up with newer products which are gaining traction in the market. Their market share is also growing consistently. Now, while the other players are not a major threat for Minda Industries, because in itself, Minda Industries has been able to perform really well, this is something that they will need to watch out for in the short term as well. The third risk for this business is regulatory changes which can allow cheaper imports. Now, this is something that is beyond the control of the business. They will need to watch out for the changes in government's policies, whether they allow the import of cheaper products, which are in fact much cheaper than the products that they manufacture. This is something that Minda Industries will again have to be cautious about and take a note of every step of the way. This is a very wholesome view of the business understanding. But do the financials support my analysis? We will now take a look at the revenue and the profit growth for Minda Industries. Take a look at this 4-year profit chart for Minda Industries. What do you see here? The profit has been consistently growing on a year-on-year basis. In fact, there has not been a single year where the revenue for that year was lesser than the previous year. This just confirms what I've been telling you all along. Minda Industries has a very well diversified and a very strong product set. Now, they are taking use of that product portfolio and making sure that their revenues consistently increase. But what about the profit? If you take a look at the profits chart, you will see that there the trend is a little different. A little uncertainty, a little erratic nature of movement of profit. This would largely be because of the expenses, because revenue minus the expenses will give the profit. This could be due to fluctuating input costs. This could either be due to the mix of local versus import of their raw materials that they use to manufacture the components. But this is something that the management will need to watch out for, need to look very cautiously, because this is causing an impact on their bottom line, which is the profit. Now that you understand the overall summary, what can the future of Minda Industries look like and what is my personal recommendation for this stock? Let's find out. I am extremely bullish on this kind of business for Minda Industries. There are ample reasons of this. Yes, there are certain challenges as well. There are certain risks as well. But I'm fairly confident that the management will figure out a way to get past these risks. In terms of why I am bullish on the stock, I do believe that electric vehicles, whenever this space kicks off in a rapid manner in India, Minda Industries will be the front runner in that aspect. Their product portfolio is extremely strong, extremely well diversified. Their joint ventures with companies which hold expertise in the overall auto components manufacturing is also going to hold them steady for the long term. Alright, this was my analysis for the Minda Industries business. I hope you enjoyed this. Do subscribe to Finance Lens and I'll see you the next time.